Well, a measure of housing affordability in this country climbed to its worst level ever in the second quarter of this year, meaning that the typical Canadian house is now around 32% beyond the borrowing capacity for a median income household. So where will affordability and house prices go from here? And can some Canadians expect any relief anytime soon? Our next guest says that Canada's real estate correction is far from over. For more, let's bring in Tony Stillo, Director of Economics for Canada at Oxford Economics. Thanks so much for joining us today.
Oh, glad to be with you.
So you think that the correction in housing prices is not over yet, which is interesting because we have seen prices pick up this year, at least at the start of the year. So play it out for us. Where do you see things going?
Well, as you mentioned, we think we're about halfway through. The upswing we've seen in resale housing markets in the spring, we think is waning, and it's going to crest. Prices will crest this summer, and we're looking for a second leg down in prices from the summer, another 10%. So by the middle of next year, we're looking for prices to have fallen from their peak in 2022, February 2022, about 20 to 25%.
And I think we've got a graph showing, where prices have gone and your forecast included on the end there as well. Now, is this, we're looking at sort of Canada overall with prices and your forecast here. But, region by region, is this being felt everywhere or is it in, particular areas?
It's felt differently across different parts of Canada, for sure. We know markets like in the Greater Toronto area, Greater Vancouver area, were really out of reach, quite out of reach heading into the pandemic, and they only got worse during the pandemic. And other regions across Canada fared differently. Out west in the prairies, you can see their markets are still doing well because they didn't have housing prices that far beyond the reach of the average household. Southern Ontario and Lower Mainland in BC were the hardest, were the mostly affected and least affordable.
So when you're thinking about, the months ahead, the 6 months from now, perhaps, Tony, what are some of the factors that you think will lead to that further decline in house prices? Because, the beginning of the decline really came from those interest rates getting ratcheted higher and higher. And then that pause seemed to bring people out, off the sidelines and getting interested in the housing market again. So how do you see those sorts of those forces at play?
Well, we think there's about 4 or 5 factors. We think the economy is headed for a moderate recession. We think it's approaching quite soon, probably this summer. We're going to see the impact on consumers, both from higher interest rates and being squeezed by higher prices, basically pulling their spending. And that's going to be the key trigger that you'll see soon. And those interest rates that we talk about, they take a while to flow through to the average individual and what they do with their decisions to purchase or not. And so the lagged effect of that, we think of past interest rate hikes are going to fully hit in the second half of this year. And now the Bank of Canada has started to raise interest rates again. So we're expecting, they raised another 0.5 point, their bank rate, and we're looking for mortgage rates, for example, 5-year conventional mortgage rates to rise from their current about 5.8% to about 6.1% in the second half. And then you throw on top of that tighter credit conditions with a little fallout from the ongoing turmoil in the U.S. from their financial sector, which does have knock-on effects for Canada. And as you mentioned, we've got record unaffordability. We thought we were at an inflection point a year ago with unaffordability of housing across Canada. And we've seen in past experiences since the early 80s, they tend to realign with borrowing capacity of the average household in time. And now unaffordability is at a record level, and we think it'll get a little worse in the second quarter because house prices have edged up, interest rates have edged up, and they've outpaced income. And only in basically the latter part of this year through the next couple of years where we start to see an improvement in affordability. So it's going to take a while. We don't think housing will become within the reach of the Canada-wide, the average household until 2027, once prices settle down to a lower level and grow at a lower pace, incomes grow and interest rates we think will be high for a while and gradually return to a somewhat lower level by 2027. So it'll be some time, unfortunately.
Yeah, we're looking at your graph here of affordability, and it sort of looks like it, levels out in. I'm not sure if those are the right. Are those the right years? Are we looking all the way out to? No, I think those years should be out till. Till 2035. Yeah, you're looking really far in advance there, Tony. Yeah. So you think affordability over the longer term will improve, over more than 10 years?
Yeah, if you look at that little shaded band, that's basically the level of 100 is where the median income household can, with a 20% down payment, buy the average house. And then the 110 is where they take a 30% down payment. So we'll be within that top end of the range by 2027, and we think we'll stay in there through the longer term. What we're looking for in the near term is prices to correct, as you mentioned, but also in the medium term, we're looking for supply of housing to outpace demand. And governments have made a lot of concerted efforts to streamline the development process and get more housing built, and that is what we're hoping for, where it'll keep price increases in check, rising at a slower pace than incomes, and help us to maintain that affordability for the average household across Canada.
Okay,
it will be different across the country.
Yeah, so this really does depend on the supply coming online, because if you're thinking about prices coming down a bit more and maybe interest rates coming down eventually as well, and that affordability picture improving, then I could imagine people on the still on the sidelines, Tony, thinking, well, now's a good time to buy, and then that adds to the demand picture.
Yeah, but you also get a different sort of expectations. Once people think prices are falling, they'll wait. If they don't think their jobs are as secure or their incomes are as secure, that's how you pent up demand. There is pent up demand. But during a recession, you basically postpone those major purchases until conditions are better for you. And so we're thinking that'll manifest itself over the next year or so, during the next year, and we'll see demand and supply hopefully realign better. But again, like you said, we need the supply side to come on in the medium term to keep things in an affordable range.